Let's bring in Needham's Laura Martin to react. Laura, good to have you today. Interesting. The takeaway from my perspective from that interview was a lot of more of the same, business as usual. We're going to keep doing what we've been doing, both in AI. We've been in there, and it's going to take hold pretty soon. But also in terms of the structure of the company, no spinning out of AWS, and kind of blocking and tackling on the retail side, and general cost cutting as opposed to some big push for higher margins. So what was your main reaction, and what do you think this means for the stock?
So, I mean, I think that is his preferred, like he wants it all to go away. But I think it is shameful that we just had a generative AI launch day last week, which is 7 months after ChatGPT. So talk about defensive in the division he came from. And if you look at these horrible margins at Amazon, my words, not theirs, 2% operating margins last year, and now for the empire overall, and now he's going to want to spend a ton of money trying to catch up with Microsoft and Google. The market won't tolerate it. They're not going to let this company cut its margins, and he's laying off people, which is really bad in a consumer-facing business because it hurts morale of the rest of your employees and makes consumers not like the brand as much. So I don't think he's as sanguine in that seat of his. I think he's far too sanguine. He needs to keep these shares going up.
So what would be, I guess, 1, 2, and 3 on your list of what he ought to prioritize then?
He should spin off 10% of AWS. He gives us the financials anybody. It would allow tax consolidation. It would let a totally different set of investors invest in AWS and give them capital to drive what is going to require billions, actually, of dollars. We know from Microsoft, they're putting $10 billion into ChatGPT. They only own 49%. So this is going to be billions of dollars that he's going to require in his cloud business. And the e-commerce business doesn't make any money. It's sort of their anchor tenancy, but they don't make any money. So he needs to spin off part of this so it can get a higher multiple so he can fund what he needs to do in generative AI over at cloud.
Do you think that we'd have any surprises as to how the rest of Amazon would trade if AWS were capitalized separately? In other words, is it just such a huge predominant weighting in terms of the overall company valuation that the market is going to pay even less for the rest of it?
So I think conglomerates always get a pretty big discount on from Wall Street. So because when we add up the actual value of what we think cloud would trade out separately, and we think the media like Prime and Twitch, all these assets get buried in the conglomerate and the margins get pulled down by e-commerce. It is my point of view that the more you separate those financial statements from e-commerce, the more they would have to increase their e-commerce profits, which would be better for the business and for capital allocation in my point of view.